services to navigating the complexities of digital management, and Nathan McCauley, the CEO and co-founder of Anchorage Digital, one of the leading digital asset platforms for institutions. Welcome our next panel.
Thank you, Natalie, and thank you all for joining us today, and thank you for the panelists. I know people have traveled pretty far. Salman, I think you might get the award for traveling the furthest, so thank you all for being here. So this session is really focused around, I guess it's titled Bitcoin in the Boardroom, but I think what we'd like to focus on is, how corporations think about innovating with a Bitcoin strategy. What are the thought processes that go through at the board level, at the management level, from a strategic level? And also we have, probably some unique perspectives around how customers that each of the companies here service also think about those types of initiatives. And so I guess, to kick it off, I'd probably, describe a little bit of the journey that MicroStrategy has gone through. It's been a very impactful and eventful one. We were obviously one of the first large corporations to adopt Bitcoin as a treasury strategy. And in fact, it was probably, in the timeline of adoption, very early. And I can imagine, I wasn't actually at the company in 2020, but I can imagine the intense conversations, the deliberation and debate that went on. But one thing that resonates with me from a MicroStrategy perspective is when we think about the initiation of the treasury strategy and the ongoing support and execution of it, it is something that permeates down throughout the organization. It obviously starts very much so with our executive chairman. We have alignment at the board level, we have alignment at the senior management level. And over the course of the past 4 years, the company has really transformed from a values and cultures perspective to also embrace Bitcoin as a corporate identity. And so a lot of what you see as an identity today in MicroStrategy permeates not only the foundation of our business as a technology forward and innovation first software company, that very much blends in from a DNA perspective into how we embrace Bitcoin as a digital asset, as digital property and a digital store of value. So for us, you look at us, we still have intense deliberations. There's a lot of energy in the room when we talk about our Bitcoin strategy. And it consumes us in so many different ways that's positive and has created a lot of shareholder value for our company. Excuse me. So I guess maybe I'll start with Nathan. Anchorage is the only federally chartered crypto bank in the U.S. And that alone, speaks to probably a very unique journey and how you founded the company and all the things that you had to consider in really executing that strategy. Maybe we'll start with you, and if you can help us understand a little bit about that journey, that'd be great.
Sure, and I'm really honored to be here. Thanks so much for having me. So Anchorage was conceived in late 2017. And the idea there was back in 2017, Bitcoin was the main topic at say Thanksgiving dinner for a lot of people that year. That was when it really kind of took its first real gain into prominence in terms of the cultural zeitgeist, if you will. What ended up being interesting is I and my co-founder sat down and kind of looked at the market landscape and realized this was an entirely retail-driven phenomenon. And the bet we made in 2017 was, what if institutions wanted to adopt Bitcoin over time? What if institutions wanted to buy and hold Bitcoin? Wouldn't that be incredible? And so at the time, felt like it's possible that we're really late to this market. It actually felt very late to start in 2017. In hindsight, we were incredibly early to that idea that institutions might look to adopt digital assets, and particularly Bitcoin. So basically kicked off the company with the goal of solving two big problems, which is let's provide the most secure and safe place to hold your Bitcoin, and let's get the whole thing regulated so that, say, registered investment advisors, public companies, any of the world's institutions that need to go through an incredible amount of due diligence and organizational due diligence on their counterparties would be able to hold with us. Incredible security, incredible regulatory apparatus. Combine those things, two things together, and that's basically the bet we wanted to make. Now we are 7 years later, and it turns out that bet was right. Turns out that many folks, many institutions over time have wanted to adopt digital assets, MicroStrategy being one of the biggest ones that has wanted to do that. And along that journey, we were fortunate enough to be granted the first ever federal bank charter to hold digital assets. And there's a whole journey I could get into with any of you on that process, but imagine an incredible amount of due diligence and oversight from the federal government around how we hold assets, how we do that in a fiduciary capacity, how BSA, AML, compliance, and accounting, and security even are all held to an incredibly high standard. And that is the high standard that is needed to really catalyze and continue to grow institutional adoption for digital assets. So we're really excited. The way we think about it is that the Bitcoin ecosystem deserves a bank, and we are happy to get to serve that capacity and help institutions participate in the landscape.
Great. Salman, as the largest Bitcoin miner, your business, literally is Bitcoin. Can you give us a better understanding of Marathon overall and how you guys have changed and evolved over time as well?
Sure. Thank you for inviting us. This is a phenomenal opportunity to connect with people here, so appreciate you doing that. Marathon is the largest publicly traded Bitcoin mining company, as you alluded to. We have global operations. We view ourselves as a global company. We operate in the United States, in multiple states, going from Texas, Nebraska, North Dakota, and Ohio, and then overseas we've got operations in the Middle East region and also in Latin America. And we're expanding further significantly overseas while our domestic operations continue to grow. The company has been, when you think about it, we view ourselves as from a three-pronged perspective. So one is we are focused on the Bitcoin mining utility scale business. That's one of our business units. That is bread and butter Bitcoin mining, large scale, 100 megawatts plus, and that's our current operations. The second piece of the business that we are focused on is something called energy harvest. And energy harvest is what we call is the future of the space. As the technology continues to improve, the halvings keep on happening every 4 years. We find opportunities that are more opportunistic and closer to zero cost to mine the Bitcoin. And that makes this process of Bitcoin mining sustainable and also economically feasible from a longevity standpoint. So think about energy that is stranded in remote locations that cannot be accessed or is stranded because of whatever reason. We go out and take that energy and convert that into value for our stockholders. So that's the other piece of it. The third piece of it is technology. Although we are in Bitcoin mining, we've got two energies converging together. One is the energy, commodity-based risk with Bitcoin price, and also on top of that is the technological aspect of this. And I know we're going to talk a lot more about technology, but we have a technology division that focuses on operating our own and operated pool, which is unique to Marathon as a miner. And also we have various technologies that we've announced fairly recently that we're very excited about. It's a changing landscape. Every 4 years, the Bitcoin halves, production halves as a result of that. We got to be on our toes and continue to be creative about how we can create significant value for our stockholders. And underlying fact remains the Bitcoin is limited in capacity. There's a race of mining those coins. 20 million coins have already been mined out of the 21 million. So it's just the 1 million that will continue for during the life cycle of the people in this room. But this is a phenomenal position to be in because it's different from oil industry, for example. I come from oil industry, and in that industry, you don't keep oil on the balance sheet. You try to sell it as quickly as possible. Whereas in this industry, and something that was a struggle for me as a CFO coming into this space, to understand how much coin should we have on the balance sheet or not, was that underlying thought process. But it's very different at the same time from oil industry. There's no storage cost to keep your Bitcoin. And the value that it accretes over a period of time, we've seen a lot of numbers in the previous sessions. It was up 150% last year alone. It's up 35% or so, even with the decline recently now. So a very interesting space, and very excited to be here.
Thank you, Salman. And Rick, from Coinbase's perspective, as the largest U.S. crypto exchange, I know how you guys have serviced customers and the products that you've been offering has changed over time. Can you give us a little bit of some description on how Coinbase has evolved and what you guys think of as, from a corporate strategy perspective?
Sure. So to start with, thank you for having us here, and thank you for your continued partnership between Coinbase and MicroStrategy. Obviously there's a long history there, and I think I'll use that as sort of the example of what we try and do. We partner with our clients on their journey, and we try and surface sort of the range, the full suite of assets we have. Similar to Anchorage, we are heavily regulated, and I think as some of the last firms standing in the space, we're standing because we leaned in partnership with our regulators rather than sort of trying to outrun them. And I think that says a lot with how we partner with regulators and how we partner with our clients. So in terms of what we try and do, whether it's with the ETFs, which have obviously been in the press a lot, and I'm sure we'll discuss later, we try and find their pain points, deliver solutions for them, and keep building and build with them and try and anticipate their future needs. And so just, again, building that partnership as we go along.
So, as we were speaking, I think all individually, maybe I didn't dive directly into it, but I'll take an opportunity to. Regulatory landscape, whether you're a U.S. chartered bank or you're a public company, there's a lot of focus around making sure we do the right thing from a regulatory perspective. And so one of the things I take away as we're speaking, MicroStrategy, for example, has been a public company for over 25 years. And with that comes a lot of rigor around making sure we have the right financial reporting, we have the right internal controls. All of our partners have to have the right internal controls. That's a lot of, sort of the infrastructure that has to exist in order for a corporation to be able to implement a Bitcoin strategy. And for MicroStrategy, it's been a very important focus. And kind of what I reflect as I hear everyone speak is each of the institutions represented here also focus on that. So there is an alignment that exists in order to be successful in executing on a Bitcoin strategy. And one thing I reflect on is over the past 4 years, and probably even longer than that, that has become easier, that has become a little bit more transparent. Every year that goes by, we have sort of an event that has more regulatory clarity supporting a Bitcoin strategy for companies. I know we'll talk a little bit about it later in the regulatory panel around some of the accounting rules that have changed. Obviously, the SEC approval of the ETF products is also another support of the ecosystem. And so, as I reflect on how we as a company think about Bitcoin, regulation, compliance, and being aligned in the right way is very important. And there's a lot of thought around it. And I just want to highlight that it seems like everyone here also sort of is aligned in that way, which I think is important. So my next question is, around different considerations that management teams face around either adopting Bitcoin strategy or evolving a Bitcoin strategy. MicroStrategy, for example, started in late summer of 2020, took about $550 million of cash that was on balance sheet, converted that into Bitcoin through a couple of capital markets activities. And ever since late 2020, we've added more Bitcoin on our balance sheet every single quarter. And we've done it in a way that's been diverse and also very successful and focused on shareholder accretion. One of the things MicroStrategy did earlier this year is we announced ourselves as a Bitcoin development company. And so for me, that sort of reflects the evolution of a company that's been in the space and devoted to Bitcoin over the last 4 years and continuing to think about ways to innovate and change and evolve in the ecosystem. And for us, what a Bitcoin development company means is taking sort of the core software business that the company was founded on, integrating that into how we think about Bitcoin, leveraging advocacy efforts, a lot like what we're doing here this week, and also taking other components of corporate strategy, such as access to capital markets, in order to uniquely find ways to gain leverage, raise capital, and accrete more Bitcoin on our balance sheet. So for MicroStrategy, it's certainly an evolution that began with taking $500 million of cash and buying Bitcoin, but over the last 4 years, that's really accelerated and evolved. And so that's a little bit of kind of a description of what we've gone through. I guess, I'll open it up to the panel. Like, how have you guys evolved over the past few years, and how do you guys, are there any things you're thinking of down the road that may continue, sort of innovating within the space that you operate?
Yeah, so I'll take that. Marathon has gone through its own transformation. The company was formed a couple of years ago, and it was in a different business altogether. And the previous CEO and chairman decided to move in this direction and invested heavily in Bitcoin miners. So think about the machines, invested in that and deployed them in data centers that were not owned by the company, and they were rented space. So thereby saving 30% of the capital and start hashing and producing Bitcoin along the way. Over the years, we have transformed in the sense that we are now taking more portfolio approach. Last quarter, for example, we announced 2 major acquisition of data centers that added significant capacity to our company. We're now more than a 1.1 gigawatt in capacity, and we continue to grow. And that energy is essentially converted into Bitcoin through the miners that we've invested in, which are the most efficient in this industry. And with the passage of time, we continue to invest in that. So the transformation for us has been more from the asset light strategy to now almost being 60% owned and operated, which is asset heavy. That gives us a better flexibility as the Bitcoin price goes up or down, gives us a nice rate of return in different price scenarios. As I had said earlier, this is a commodity price exposed industry from a mining perspective, and we produce a coin that is almost approximately or less than 20,000 per coin, and we hold that on our balance sheet mostly. And the strategy has been that we sell the Bitcoin up to the extent that we need pay for our G&A costs and operations costs, and electricity bills and things like that. Other than that, we keep that on our balance sheet. So as a result, we have the largest Bitcoin position in the balance sheet compared to other Bitcoin miners, and we continue to grow from there. Which is very interesting, because if you take you mentioned FASB rules and new accounting and regulations and ETFs, the new accounting rules allow us to fair value these coins on our balance sheet, which we early adopted. And if you think about it, just $10,000 change in price of Bitcoin results in $200 million swing in our EBITDA, which is huge. And that gives us that value that the stockholders can see. It's an asset that's sitting on our balance sheet that continues to escalate in value and create value for our stockholders.
I think the questions around the sort of the mindset of people in boardrooms that are getting into digital assets, I think they're different types of clients that have very different mindsets. So I think, MicroStrategy is one example, and you are probably both at the extreme end of your main question is like, how do I acquire it? And then how do I store it? How do I hodl it? And I think that's like one set of people. We have another class of client that says, why should I? Should I invest? I'm a trading house. I'm a macro hedge fund. Should I trade spot Bitcoin? And that's an engagement. That's a conversation, a mindset of why should they? What does the opportunity look like? How might this translate into more of a TradFi explanation for what it is? Because they have a set systems and processes that they understand. They have accountings that they need to do. And how do we fit that into those molds? You touched briefly on regulatory before. A lot of those firms may be RIAs. They're interested in our SOC 2 Type 2 audits. It's very detailed, and sort of to get them over that decision, it's a lot of steps, some TradFi type steps that we in crypto don't like necessarily think on, but we have to do it to help bring them over that bridge. And I think that concept of a bridge is really what we're doing in our industry, is providing that bridge from sort of TradFi to NewFi. And that's what we do. And different clients, again, whether they're VCs or family offices, they need sort of different bits of handholding and different solutions to help get them across their bridge.
I guess we mentioned several times ETFs, and I know the panel before us talked in depth on ETFs. I guess, as I mentioned before, it's certainly another catalyst in the adoption, in the institutional adoption. Do you guys have any perspectives on that, plus the halving and sort of the increase in demand, and what are you seeing from your customers around 2024, in terms of different opportunities, right? Rick, you mentioned there's probably a use case for a lot of different types of customers. There's a HODL use case, there's a TradFi, investment use case. What has happened in the past 6 months that may have demonstrated an increase in that demand?
Yeah, I think one of the things that's been really interesting in looking at the Bitcoin ETFs as a category is a little bit the kind of built-in contradiction that comes from the idea of a Bitcoin ETF. Generally speaking, the ETF wrapper is supposed to be a product that encompasses an investment strategy. And so sometimes it's a basket of stocks. You think of SPY as being one of the very popular ones. And so the idea of a single asset ETF almost at the start is a little bit of a contradiction in terms, except for the fact that what that wrapper does is remove so much of the complexity. The issuer has to deal with the acquisition of the Bitcoin, the storage of the Bitcoin through a custodian, and all of the kinds of accounting and other kind of back-end processes that are there. What we've seen, the main response that we've seen at Anchorage with the Bitcoin ETFs has been a renewed interest in other products that are available within Anchorage. I think particularly around our RIA platform, where we're going to be able to service RIAs and allow registered investment advisors to get their clients into Bitcoin, and increasingly seeing that there's just as much demand on that side for directly holding spot Bitcoin as there is for holding within the ETFs. And so in many ways, the way I look at this is that there was, shall we say, latent demand in the market that was satisfied via the Bitcoin ETF wrapper. And then the natural consequence of that is that there are still people who want to take a position in Bitcoin that are unable to. So there's other mechanisms by which we will see unlocks similar to, if not greater than, the unlock that has happened with Bitcoin ETF. So to me, one step on the journey of which there will be many more kind of milestones over the next several years. So super excited and really, really happy to be able to help serve that market, both because it's an exciting market on its own, and because I think it's a kind of a harbinger of how much pent-up demand there is to get institutions, investors, and corporates, all kinds of institutional investors into the Bitcoin ecosystem.
Yeah. I'd like to add in as well, it's been interesting, and sort of going back to people at Coinbase who've been here longer than I have been, they've been working on this for 5 years. And this didn't happen slowly. A lot of regulatory engagement, you can call it unsuccessful or successful, but in the end, got everything across the line. I think what that's done is had two really large impacts. One, as I mentioned, the bridge, getting clients across that bridge just got a lot easier, because once it has a stamp on it of approval, not just from the SEC, but just the volume of assets that have gone into it, and the amount of interest, the breadth of interest. And so that is bringing more investors in, is the first thing. And the second thing is that those investors that come in, we sort of built a flywheel, if you build it, they will come sort of style. And we have trading, we have custody, and we have financing. And that financing piece is actually critical, where it's something that people had been using, but they now seem to be activating more across the piece, sort of using all three of those systems in a complementary fashion. And we're seeing a lot more take-up and a lot more breadth sort of across those as well.
Yeah, I recall, Rick, you and I were chatting right around that time period, and it's like steam was coming out your ears and your hair was on fire, just given all the stuff that was going on.
Yeah, I live in New Jersey, but I took an apartment in New York City for that week. It was exciting.
Salman, is there anything related to the ETFs that has impacted Marathon?
Yeah, when you think about ETFs and the thought of BlackRock and Fidelity, the traditional names coming into this space, obviously talks very loudly of what the value proposition is here, right? Again, these are different different investment categories that are available, or products available to investors that they could invest in. ETFs are not a new phenomena. These have existed for ages. But if you think about it, out of the 11 ETFs that were launched, 4 of them were probably one of the best launches of ETFs in the history of ETFs. And that shows the amount of appetite that's out there for Bitcoin. And we haven't seen the institutional investors as yet. This is just retail and probably some hedge funds. So there's significant upside from here. The Bitcoin production keeps declining every 4 years. And although global hash rate keeps going up, which means that there's more people mining Bitcoin worldwide, but this will be a very interesting phenomena because all these ETFs have to buy Bitcoin in support of what investors are investing in those ETFs. And there's a demand and supply play that comes into play, and that's why the price has escalated prematurely before the halving even has occurred. Historically, it used to be after halving, few months post-halving, you would see price going up. And this time it's unique because of the ETF demand. The price has gone up considerably.
Yeah. It's definitely the first inning. And I think we had an interesting interaction with one of the ETF providers that was having a client event, a conference, talking about sort of their platform and what they offer out. And they had one of their quants go up and describe like various scenarios of simulations they've done with different percentage allocations to Bitcoin. And it basically said, you'd be ridiculous not to have at least a 3% allocation. I think that was the number. But he mathematically went through it as to why in the portfolios and all these different scenarios. Now, whether the right number is 1, 3, 5, or 10, or 100 in Michael's case, is up to the individual. But like just as that type of mentality seeps more into the traditional allocators, all the platforms that have activated have all these clients behind it. If you think about it, most of the people in this building can actually now buy Bitcoin indirectly because they can access the ETFs on their phone through their Fidelity platform or whichever. Whereas prior to January, having them buy spot Bitcoin would have been a bit of a hassle. So it's really broadened things out.
So certainly a bigger on-ramp. And you mentioned something just now, prior to January, a lot of folks, if you wanted Bitcoin exposure, you'd have to figure out how to get it and how to hold it, right? And we have, 2 great custodians and exchanges here. I can tell you from MicroStrategy's perspective, how we acquire Bitcoin and how we hold it is of the utmost importance. How have you guys, in your experience, seen customers or clients? What do they focus on? What do they care about? Whether they're a large public corporate company or a family office or an ETF or whatever the different kind of customer profile would be. Like, what do you see in terms of how people think about exchange and custody?
Yeah, it's a really good question. I think the first thing that I think surprises, say, corporate treasurers or investment teams when they start thinking about allocating into Bitcoin is the very fact that it is a thing you have to think about, how to custody digital assets, how to custody Bitcoin particularly. For most of these folks, their entire career has been an assumption that there are extremely qualified, capable custodians that can hold roughly all of the assets they invest in, whether it's stocks, bonds, equities, any kind of alternative assets. So custody as an area has almost felt like just background oxygen that's just, you just breathe, and it just exists. So that's the first thing that ends up being interesting is like, oh, this is a real topic with real consideration that needs to come in, due diligence across the security side, the regulatory side, and then the counterparty reliability side. Is this a new partner that is going to support me in my journey? Are they going to hold the assets well? Am I going to be able to move the assets very quickly if I need to do that? And what is their regulatory standing? Not just who is their regulator, but internal controls. They have SOC 1, Type 1, SOC 2, Type 2, and just kind of across the board looking at everything that needs to go into that. We are set up to support our clients in that journey, to not just come to us and know that we are a good counterparty across all those, but really to help understand what that looks like. Here are the questions that you need to be asking, because you may never ever ask these questions of a custodian because of how much this is just kind of assumed in traditional finance that there are capable custodians. So on the custody side, super important, and central to it is the security question. And this question cannot be overlooked, cannot be overstated. In most asset classes, there's a set of agreements among all of the counterparties that if something weird or unfortunate happens with how assets are transferred, you have an undo button. You can say, hey, I don't want that to happen anymore. That was incorrect. Move the assets back, and it's okay. Not possible within Bitcoin. If the assets move, they are gone forever. And so the need for security around the safety of the Bitcoin is incredibly important. And a lot of reason that I thought there was a good opportunity to start an institutional custodian was because of how hard the security problem is and how fundamentally important it is to get that right. And so that part of the diligence process ends up being really interesting. We do with our clients sometimes even site visits to our data centers to be able to look at our storage facilities, look at where the assets are held, so that you can get like a real sense of the security apparatus that goes into holding the assets.
You blindfold the clients before you take them to the data center?
It's a whole process. It's really kind of a lot of fun because there's
we use hoods. I'm just saying.
Yeah. There's biometric authentication to get in, and there's a lot of fun stuff there. We actually have a low-level system that actually disconnects from the internet storage. So when you actually go in to hear the data center, you actually hear a little clicking that's going on that is like you can actually hear the security when you kind of do our site visits. So it's kind of fun. Then outside of the custody and storage of the assets, you have the acquisition of them. So where am I going to buy these assets? There's not a natural like New York Stock Exchange kind of a market where you can immediately know that you want to go there and get the best price for the assets. And so you tend to want to work with a whole host of market makers. And so within the Anchorage system, we do liquidity aggregation, we call it, where we look at all of the liquidity globally, find the best price at any point of time, and then do big purchases of the Bitcoin that can spread out over, say, days or even sometimes weeks in order to get really good price across time when it comes down to the acquisition of the Bitcoin. And so all of that kind of factors in and ends up being part of the process we take corporations and institutional investors through as they look to come into the space.
Yeah. So Rick, I know you have a lot of expertise in TradFi and now digital assets. Like what are some of the differences you've experienced in that transition?
Some of the differences, TradFi people don't change. So we have to meet them where they are. And so if TradFi, they use specific order management systems to invest, BlackRock Aladdin being one example. So we integrate with BlackRock Aladdin. So they can treat it like another asset. They have their security master, and they have these great debates like, where does crypto fit? Is it a security? Is it a currency? And it's a big deal because it impacts how things percolate through their systems. They set it up usually as a currency in their systems, and then their systems can't handle decimal points beyond 6, which is a problem. But we work with them, obviously, bridge through this. And so what that lets them do is it lets them close their eyes and pretend they're just trading a currency. So it's a bridge, right? We're trying to get them in. And then we call things custody. We give them things, names, and I want to allocate, I want an end-of-day statement. It's so much fun talking to some of these people across their journey about, they said, oh, but you'll send us end-of-day statements. I'm like, what do you mean end of day? There's no end of day. At 4? Oh, at 5? When do you send? I'm like, it doesn't day end. It's crypto. They're like, well, we don't understand. And it's just a fun thing. So when you send statements, like, when do you want statements? And so it's sort of taking them on that and helping them understand is a lot of what we all have to do. And that starts once they're live. Obviously, we can have some fun with comments like this. But just to get them here, the RFPs that they give to us, they're 100-odd page documents requesting information, obviously going very, very deep into security, but just all sorts of legalities. It's a bridge to get them across to understand, to paper. We use prime brokerage. It's a term they understand. There are documents that are common, there are liability and clauses that are common. And so once they have that familiarity, that's how they then cross that bridge and get in. And we make things as like for like as they can with traditional assets.
Just one other quick one to point on that, though. Another one that certainly over the last couple of years has been increasingly important to clients is this notion of bankruptcy remoteness. As we saw some of the issues over the past several years with some of the blockchain players going through bankruptcies, a lot of the institutional investors really have a question of if I hold my Bitcoin at your custodian, does it become part of your bankruptcy estate if something terrible was to happen, or is it remote from you and remote from your asset base? And so this one has been a big issue that a lot of people are thinking about. And the good news there is if your custodian is set up with certainly with a national bank, sufficient regulatory setup, then the assets can be held remote to the custodian's balance sheet, and this ends up being very, very important as we walk people through this process. They don't want to have some sort of exposure of counterparty risk to Anchorage if anything was to happen, and so that bankruptcy remoteness that comes from our bank charter ends up being a big advantage that people appreciate.
Yeah, so agree with that. And then just one last point then in terms of the acquisition, we also do liquidity aggregation and really trying to get our clients best execution. So sort of taking something that TradFi has, I wouldn't say perfected, but they do extraordinarily well, is algorithmic execution. So we brought that in, taken those skills from a large bench of people with TradFi experience, built that out. Crypto is still a very fragmented market. A lot of the exchanges are remote, both in terms of geography, but latency, in terms of how the exchanges work, how they settle, and in terms of how they charge. Again, one of the odd moments you have almost predictably with clients is they'll suddenly start ingesting your market data, and let's say there's a problem. The markets are inverted. The Bitcoin price like a bit above offer. I'm like, yeah, no, that's right, but it can't because arbitrage away. And the answer is no, there's fees, there's latencies, and the market is inverted most of the time. And again, the TradFi people's heads pop. But again, it's a journey.
Salman, you mentioned earlier you guys are holding more Bitcoin on your balance sheet. How do you think about custody and exchange and sort of your transformation?
Custody is important, and both the gentlemen on my right and left are providers. We try to diversify and spread the love, as they say. From a controls perspective, it's a good proposition. But thinking about control and custody and safety and security comes to mind. And being able to access when you need to access for various reasons, whether you want to move around your Bitcoin or you want to do certain creative transactions, whether they be hedging activity or monetization to sell your Bitcoin to pay for your operating costs. All those things are important for us. So All in all, from a customer perspective, it's very important to have it safely secured, and going back to the SOC 1, SOC 2 reports, those become very important for us.
Great. Moving on to sort of an associated topic. Yesterday at our Bitcoins for Corporations conference, we talked a little bit about technology innovation associated and related to Bitcoin. I think those types of kind of advancements are opening up not only folks' appetite and demand for Bitcoin itself, but different ways to use Bitcoin. Specifically things like Layer 2 and other advancements like that. How have advancements in Bitcoin technology sort of affected your corporate strategies? What product offerings may have evolved? What are some examples that you guys might have around not just the Bitcoin itself, but the things that are going along in the Bitcoin ecosystem?
Sure, I'll take a first stab at that. We're been working with Bitcoin since 2017. Certainly, as we launched Anchorage as a custodian, Bitcoin was right there as the first asset that we wanted to support. And so then, looking at the kind of second order things that need to come together once a custodian is built and operational, and how can we use some of the aspects of the Bitcoin technology in order to facilitate, say, settlement of Bitcoin among counterparties. A recent launch we've had there is around a product we have called Atlas, which creates this idea of a settlement network between counterparties. And the very interesting part being that we're able to simultaneously settle dollars against Bitcoin or Bitcoin against dollars, and have a real sense of what traditional markets call something like DVP, delivery versus payment, who pays first, these kinds of things, where you can actually get to kind of instant simultaneous settlement of both the dollar leg and the Bitcoin leg, so that you absolutely reduce any of the counterparty risk that you might see there. Other areas where we've looked at is certainly keeping up to date with the latest in advancements in Bitcoin itself, whether that's the Taproot upgrades or some of the other upgrades that have come through, where there's kind of more kind of at a technological level, additional features that are available there, whether it's for privacy or other kinds of services, and that we've been keeping ourselves up to date on those. And a lot of that driven by the clients wanting us to add those kinds of features in. And so I think it's been really interesting. And then something that's more kind of in the back end on the I would almost call it compliance innovation, has been the fact that there is in fact a chain of transactions that come back from any of the Bitcoin deposits that come into our system. And so we've actually had a very fruitful set of conversations with our regulators about the technology we've built in order to satisfy some of the banking and compliance standards that need to come through, and that ability to track the chain of custody or the chain of transactions that have come through. It's been more kind of in our back office, but has meaningfully helped us get to the point where regulators feel good about where the Bitcoin has come from. Are we meeting our obligations under various federal regulations? And so that's another area that I've found to be a real enabler for the ecosystem.
Yeah. So to jump in as well. So I think it was mentioned yesterday already. On the retail side of the house, there was demand, and so Coinbase is in the process of finishing up its rollout of Lightning. So that's very exciting, and well received by our clients, well received by the audience here. So that's one recent. On my side, on the institutional side, we're again responsive to clients. Post the ETF launch, we had some demand also so we delivered on Taproot, sends, upgraded to SegWit addresses. There have been some increased demands around OFAC screening, just as given the volume of assets and the oversight, and so the regulators being so sensitive to what's going on and all the volumes going in, Just to give some context, the regulators want to look good as well. It's not just, if assets go in and things blow up or something bad happens and they get to come in and beat on us. That's not a good day for them either, as much fun as you might think they're having. It's a bad day. They don't want a black eye. They want things to go smoothly. So a lot of scrutiny there. So some investments there on the OFAC side and screening. There's been a lot of chatter around dust and dust attacks on the ETF providers. So there's a lot of work going on there to help manage those.
When I think about Bitcoin, I think about this as like the internet of the 90s. And I grew up in the 90s. I'm sure there are a lot of younger people here. But when you think about the internet at that time, it was so slow. You had to use the dial-up to connect to the internet. And you were required to have a landline to do that. And that landline was shared by your siblings and everybody. And you had to shut down the phone for somebody else in order to get online. And it was slow, clunky, and there was not much on the internet other than a few things. Fast forward that to 30 years, 30, 35, 40 years, you look at the internet the way it exists today, trillions of dollars worth of transactions, businesses have been established on top of that clunky internet that existed at that time. So when you think about Bitcoin right now, Bitcoin is having that moment of growth. The layer 1 provided the protocol and it provided the base framework. And now you're seeing this layer 2 and other things that are being built on top of it that will provide that accretion and the value that you will be able to see the use of this decentralized and very secure network that cannot be hacked. That level of security, imagine building technologies on top of that level of security. How much value would that create? And that's where the level 2 comes into play. And Marathon has been at the forefront of the technology development. We've announced a few products in the last couple of months, Enduro and Slipstream and many others from a technology perspective. And we have a lab, we have our technology team, which is world-class, that is focused on, our eyes are in the future, right? We're looking into the future and seeing how the problems can be solved and how this network can be strengthened further and improved from a use case perspective. And there's a lot in the pipeline.
So I think, if I step back and I think about, again, coming back to the theme of integrating Bitcoin into the boardroom, helping corporations understand, how they can have their own journey in adopting, some sort of Bitcoin strategy. It really starts with sort of going back to our keynote this morning, right? There is no second best. And I'm sure we'll rewatch that hour again and again and again. And there's a lot of important reasons as to why you want to start there. But as we talk here in this forum, it also is very clear to me that once you develop the desire and the understanding of why Bitcoin is the digital asset and the digital property, and you want to go do something with it, you want to buy it, you want to hold it, the infrastructure in which you can do it, the ways in which you can do it have very much advanced in a way that public companies, leading the way and having all of the bells and whistles of, regulatory compliance and internal controls and all of the financial reporting needs have really become, in the past 4 years, just thinking about MicroStrategy's journey, easier, right? If I think back to 2020, it was probably a lot harder to think through those. And the playbook has really opened up and allowed people to consider it. That also connected with the demand that we're seeing through more adoption, more regulatory clarity outside of just wanting it, I think really sort of drives the ability of people to consider it and understand why they want it and actually effectively, securely, and compliantly execute on those strategies. So I thank you guys for your time today, and I appreciate all the perspectives that you've provided, and hopefully the audience has a better understanding of the why, but also the how, and some of the thought process behind it. So thank you guys for your time today.
Thank you.
Thank you.